Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, click on the like button, and share these videos. I discussed in yesterday's video that it wouldn't take much to scare the markets, and it certainly didn't. Dr. Fauci made sure that everybody was freaked out after his testimony today and his presentation. The state of California announcing that they were potentially going to lock down until August freaked the markets out, and heavy selling came in that last hour of trading. It was near panic level. I haven't seen this for a number of weeks. I discussed just last night that the markets were acting way too normal and it was likely that we would see volatility kick up. Well, that's exactly what happened today. There's little that can be said about what's going on this planet right now, other than it's very unsettled, and that some of the patterns that I've been discussing over the last several weeks look like are going to start to unfold. The markets are setting right at major support, and a break below certain levels, which I'll talk about in the technical section here in a few minutes, will definitely roll this thing over and will set up some further downside over the next days to come. Just expect to see things very volatile again as we start to kick in to yet another round of uncertainty. Remember that there is a live cast at 1:30 Eastern Time on Wednesday. I'm going to keep this intro very brief. I'll cover a lot of details tomorrow. Let's take a look at the charts and see what they're telling us and what the effects are likely to be going forward. Looking at the S&P futures, yesterday's reversal has caused a lot of havoc with the technicals. I discussed last evening that the upward rising 10 and 21 period moving averages were likely to hold the markets in that range and continue to move in an upward slope. However, yesterday's reversal was pretty much unexpected because of the news of California going to continue to be shut down and other factors that were going on yesterday. That last hour of trading pushed the market down below the 10 period moving average and traded down to the 21. Now the critical level I discussed last night is 28.44. A close under that level today will signal a move down to 27.02, the possibility of going to the 26.50 levels. I've been stressing a lot of concern over these PPMs declining and diverging. The last time we made a high was early in this cycle, and every high has actually been a divergence high as we go through this pattern. What this tells us is that there is a potential for a pattern failure. As we look down below here at the PPM3, it is starting to roll over, but it is a plus 0.35, which is in trend mode, which suggests that this green line here, 27.02, will be substantial support at that level. However, this could change based on the action over the next couple of days, and we could see this PPM start to flatten off, telling us that the market could decline below that level as this new pattern starts to unfold. Over the past several weeks, this pattern has been difficult to read, primarily because of the several extensions. Originally, I had this counted as a five-way pattern. This would be an A, and then B, and then a C wave down. That still may be the right count. One of the things about patterns like this, especially when there's a larger correctional phase after a huge decline unfolding, it gets to be very complex, and you're going to see these alternate counts come into play. What this tells us is that the close today, that 28.44 level, will be critical. A close below that level will signal a move down to 27.02 to 26.50, but this is going to be the key pivot point in this market. We're talking about the potential for a head and shoulders top here. This projection here would actually easily trigger us back down into that 2400 level that we've been talking about. Let's take a look at the weekly graphs just to get a bigger perspective. So I've been discussing this pattern for a number of weeks now, actually since this rally started. Now that we're starting to stall here, we're seeing the 21 period moving average start to accelerate again, which is indicated down here below at this PPM2. This acceleration down in this trend coming down. We're also seeing downticks in PPM3 and PPM1 is downtick. It is now in a negative pattern. And the declining 10-period moving average that's been going on for the last 3 weeks has been really worrisome. I've not seen this type of pattern unfold. Primarily it was because of the steep drop. We're now starting to see some acceleration, and all three of the PPMs on a weekly basis are negatives. So the likely pattern to unfold here is going to be this ABC pattern I've been talking about, and we may see just a real grind out here. This is a pattern that you folks are probably getting tired of hearing about, but once we go beyond the day-to-day noise, we start to look at the longer-term patterns. This is what's setting up. Now, there's going to be a lot of trading opportunities, and the trigger tomorrow will be that 28.44 level. If we trade back through that and close under it tomorrow, then you're going to have an opportunity at least for 27.02 to 26.50, and the possibilities for more depending on how this pattern sets up over the next several days. I've talked about this at length over the past several weeks, is because of the uncertainty, the most likely scenario here is an absolute choppy sideways range for multiple weeks. We're not likely to get out of this pattern. The whole scenario of a V bottom continue and we just go straight up to new highs is becoming very unrealistic, to say the least. And it was far-fetched to think about in the first place, but it was all predicated on the economy getting back open. And if we do see a resurgence of COVID-19 anywhere, then that's just going to set us back in, and this could actually set up for an absolute catastrophe. As I've also discussed over the past several weeks, then the fundamentals will come back into play, and the fundamentals are terrible. That tells us that this market could go into an absolute collapse. While there was amazing excitement around this rally and optimism, it just got way overdone. I won't bring it up tonight. I will bring it up in the live cast tomorrow. But the quantitative database I mentioned last night also got to 76% bullish. Whenever it gets there, that tells you we're about to stall, and that database is going to have to correct. We did see about 1,500 sell signals come out of the system last night, so it's starting to back off. It's still very frothy, well above 68%. So we'll go through that tomorrow in the live cast. Don't forget that at 1:30 Eastern time, we'll do the live cast. I'll go through a lot of details tomorrow, answer questions. We'll even talk about the airlines, which still haven't really triggered any major moves yet. We'll talk to you at 1:30 on Wednesday at the live cast. Thanks for watching.